So over the past week, we are still seeing weakness in the Singapore tech sector, right? Same thing like the US market as well. We've seen the technology stocks selling off as well by more than 5-10% over the past few weeks. And these are mainly due to concerns over rate hike expectations about rate hikes coming in this year, slightly earlier than expected, right? So where are we right now for the Singapore tech stock? So in this video, we'll be going through 4 of the Singapore popular tech stocks, right, which I've covered previously. Some of them I mentioned that there could potentially be a little bit more weakness, and indeed we are seeing more selling actually playing out. So we'll cover just 4 Singapore tech stocks today, all right, and they are AEM, right, AEM, UMS, Frencken, and ISDN, right? So these are pretty much the 4 popular tech stocks which I've covered previously as well. There are some changes, in terms of support levels. Some of them have broken their support and headed down by more than 5-10%. So let's take a look at where we are right now again for each of these 4 stocks. AEM, Frencken, UMS, and ISDN. If you're looking to get out, maybe looking to buy on dips and all that, I think this video will be really helpful, so make sure you watch it all the way to the end. Alright, and that's where I believe you'll be able to gain some value from it, right? So Joey here, let's go ahead to talk about these stocks right now. We even look at the system, right? We look at the system to see what it says. We did actually had a few bearish signals as well coming out on this stock. So let's take a look at it and see what it says on my system, and if there could actually be a bit more downside, or where could we potentially think about positioning ourselves to catch any rebound. Okay, so the first stock I would like to talk about would be this company called AEM. Alright, AEM Singapore dollars. AEM is one of those leaders in the Singapore tech sector, and we have seen quite a good push somewhere in November when we kind of broke that $4.30 resistance. Look at this, was a little bit of resistance here. We have been trading below since like March all the way to somewhere around like November, alright, 2021, and eventually we broke this $4.30, and there were some upside targets that were drawn. We managed to push up all the way to like $4.65 and even the $5.40. So quite a strong upside, 24% upside that we've seen somewhere in November when we kind of broke that $4.30. All right, but you can see it was pretty much consolidating. All right, you can see it was like pretty much consolidating. This was the green line. All right, this green line is the short-term 20 days moving average. So it's like moving sideways as it consolidated from like November. After pushing up, you can see it started to consolidate from like about the $4.95. So a little bit of support at $4.90 to $5. You can see we rebounded a few times, and this green line is like sideways. So short term is just moving a little bit sideways, and of course if we do hang above the $4.90 or to $5, that actually could be a good thing. You could actually see like a good rebound all the way maybe to like about $5.40 to $5.50. That is where we are seeing a resistance, right, where selling can actually come back again. All right, but over the past few days, right, we have broken, right, unfortunately due to the weakness in the tech sector as well. As I say now, this news about interest rate hikes and all that is pretty much affecting the entire market, the entire tech sector negatively. All right, and that's where we kind of broke the $4.90 over the past few days. You can see we broke it and then started to see a little bit of weakness and a bit of support around the 460 level, 460, but it seems like that has broken down as well. All right, and potentially we can head down to the next support level around the $4.30. So let me just go to draw this right here about $4.30. And why $4.30? As I mentioned, $4.30 was the resistance level that we have been consolidating below from February all the way to November 2021. So this resistance level would now become the new support level. So somewhere around $4.30 to $4.35, just somewhere around there, the resistance has turned a little bit of support. Right? So potentially as we head towards the $4.30, maybe even $4.20, if you want to give it a little bit of leeway, right, somewhere around here, that's where potentially buyers can come back again, right? And also look at this right here. You can see that it kind of like coincides with this blue line. Look at this. This blue line is what we call the 200 days moving average. It's a blue line sloping up. So that's kind of like pointing towards a good longer term uptrend. Of course, short term we did see a little bit of weakness when we broke the $4.90, but in terms of the long term, if we can stay above this like $4.20, $4.30, I think that could be a good sign of strength as well. That's potentially where we can see some bargain hunting actually coming back. So some downside all the way to around there, $4.30 or like $4.20, and hopefully we see some good reversal candlestick and potentially a good rebound happening as well. So normally we don't want to try to rush to catch the bottom because we wouldn't know if this support can be broken, all right? So we want to probably see a little bit of stability, some good reversal, candlestick price actions, something like a hammer or something just around the 420 to 430 mark. That could be a good sign of a reversal potentially happening to catch the rebound phase, right? So this is AEM right here trading at about 456. It seems like we have broken the 460 temp support level, so potentially more downside, but just take note of this level 430, 420, whereby hopefully we do see some good bargain hunting coming back. Okay, so this is AEM on the 1GT, one good trend system that I have, whereby we were alerted to this counter somewhere around October. You can see it was quite a good bullish move up somewhere on the 15th of October, got a bullish signal, we got an exit, and then quite a good move right here. As I mentioned, broke the $4.30 somewhere in November, 11th of November. We got a really good bullish signal, went up and we got an exit, and it was pretty much just consolidating, as I mentioned, right? Consolidating, just above the 490 to maybe around the 540 level. That's where the resistance is, and it was just moving sideways, and the green 20 days moving average line was just moving sideways. So a couple of entry and exit signal here. It was consolidating, not much of a move, but I think just recently right here we got like an exit for the bullish signal, kind of like a arrow pointing down, so like an exit, and then we started to see more weakness coming in, right? So right now there are still no new a bullish entry signal yet, so I think we kind of like head towards the $4.30, 420, 430 around there. As I mentioned, back to this support level. Potentially we see like a new bullish signal coming out, then yes, that could be a good indication for us to kind of like get in again to ride the reversal back up to maybe back to the $5 or $4.60 level. Okay, next one would be Frencken, right? Frencken, and we are still continuing to see weakness in this stock after some slight consolidation. We were at about the 180 support level. You can see just about 2 weeks back, we were around the 180, consolidating from like 180 to $2. You can see that's pretty much the resistance level at about $2, a psychological level. And I would say that, I did a video on this previously, and I mentioned about this $2.10 level when it was broken. All right, definitely there were some signs of weakness coming back, and the moving averages were starting to like point down. Look at this, the green line pointing down below the red line. We broke the 210, so not a good thing. Of course, the $2 psychological level gave way as well. All right, broke down, went to 180, rebounded, and this was pretty much the range we have seen. Let me just go to draw it for you right here, about 180 to around the $2. So we're like consolidating, but unfortunately, right, we broke this $1.80 just on the 19th of January. We broke the 180, so not a good thing. That's where you can see the selling pressure really came back fast, right? Went down, we even broke the 160 today, and that's where more selling is coming back. It's about 152 right now. So potentially we might actually see a little bit of weakness all the way back towards the 135. Let me just go to draw for you some downside targets, unfortunately, because we broke the 160 support level as well. So some downside targets can be drawn maybe all the way down to maybe around the 135 to $1.40 level. Why? Look at this right here. This is pretty much where we were in March 2021, where we rebounded from as well. All right, so that's potentially where some support can come back. All right, but we don't want to rush to get in near the support level. It's best to wait for some good stability, a few days of prices holding above that support, or maybe some good bullish candlestick price session coming back before trying to catch the bottom. Because right now, in terms of the short term, all right, there are still signs of weakness, right? With it consolidating, right? Look at this right here. It was like consolidating. It broke the 210. We consolidated from like 2 to 210. We broke the $2. From 180 to $2, we broke the 180 as well. So it seems like each time it's consolidating and breaking the support level and pushing lower. So that's not a good thing if you're like trying to get in at a support level, and if there are some signs of weakness in terms of the trend turning down, there is a possibility of that support getting broken as well, just like what we have seen. It broke the 210, the $2, the 180, and even the 160 as it comes down. So if you're trying to just catch it and trying to buy at a support level without seeing any good clear signal of reversal, that is where you might get caught again if that support level were to break down. Does it make sense? All right, so want to wait for some good stability first before trying to rush in. But if that's potentially 135 to 140 is where we can see some bargain hunting, hopefully. All right, and hopefully some stability in prices. Okay, so that's Frencken right here. It looks a little bit weaker for now, below 160 unfortunately. So let's take a look at Frencken on my 1GT system as well. And actually Frencken was one of those really good uptrending stock, in 2021, since like February, March, we had some really good bullish signals coming out. You can see in March, we got a bullish signal, went up, an exit, another green arrow pointing up, green arrow pointing up, it went up all the way to somewhere around like September, October, as I mentioned, somewhere around the 240, 250 mark. That's where it started to consolidate sideways, and the trend kind of like turned a little bit from up to a little bit of sideways, and now it seems like it is coming down. So it's like pretty much moving sideways, and I talked about this $2.10 level. Let me just go to draw it for you. This $2.10 was quite a firm support level, all right, that we have kind of like broken down, right? So it's like a very, very strong support level that we have broken down. And let me just go to put this right here in green. All right, so this was like a support level. We broke 210, and even the $2 gave way. All right, so we actually had like a bearish signal that just came out, somewhere in November as well, just before we broke the $2. I mean the $2.10 as well. So when we break the 210, that could actually be some signs of weakness as well. So we got a bearish signal, started to come down. We got an exit, and on the 6th of January, right, we rebounded a little bit, you can see, but sellers came back and pushed prices back down again. So 6th of Jan, we got a new, this is a red arrow pointing down, right? So we got a new 1GT bearish. It's a red arrow pointing down, 1GT bearish signal. So it's not so good, and that's where prices continue to hit down to where we are right now. And then today we broke the 160, right? So not so good from the system as well. We alerted to some, bearish price actions potentially coming in. You can see from the trend bar as well. We have a trend bar right here, right at the bottom. You can see that the trend has kind of like turned from like a green trend bar. So it's green in color, right? Dark green, light green is uptrend, but we have kind of like turned to a little bit of red in color. So that means it's a little bit like a downtrend somewhere around here when it broke that 210, right? Somewhere in early of December. Definitely there were some signs of the trend turning from like sideways to potentially down. All right, so this is Frencken right here. We got a new recent 1GT bearish signal, red arrow pointing down, and there are no exits. So hopefully we see an exit, and hopefully we can see like a good new bullish signal coming out again. It depends on what we see, all right? That's where it can guide us to potentially take a position. If not, we just want to wait for some stability before thinking about getting in again. Okay, so this is UMS, right? The third stock I would like to share with you in the Singapore tech sector. All right, one of those stronger ones, something like AEM, but unfortunately, same thing. We are seeing selling as well due to the sell down in the entire tech sector in the Singapore market over the past 1 to 2 weeks, right? So this is UMS. We were actually consolidating quite well above the $1.40 support level. Look at this right here. So I mentioned about it in the previous video, was like 140 to 155, a 15 cents range, up, down, but we kind of broke this 140 level right here somewhere on the 19th of January. Just about a week plus back, we broke this support, so not so good, and this is where some selling came back. We went to around the 130, and that did not hold as well. We broke the 130, and we are back to this critical, right? You want to write it down. This level is critical for UMS, right? And this level will be none other than the $1.20, 1.20. Why? Look at this right here. Look at this, right? So pretty much back to where we were in like April, May, June, right? In last year, that was where we kind of broke above, right? We broke above the 120, went up, came back down. Look at this. This was quite a good reversal candle, something like a doji around the 120, and then the rebound actually happened in October all the way up to 155. So now we are back to this resistance turn support level that we have actually rebounded from 2 times, right? 2 to 3 times. Here rebounded, and we are right here. So there is a potential for it to rebound as well. But look at it today, right? Today, right now, the price is at about 1.19. So it seems like we are actually attempting to break this level. So you just want to be careful, right? You just want to be careful because it's only like 1 day, right? So right now we're seeing it's about 1.19, but of course we don't know how it will turn out when the market were to close. If we actually close higher at maybe 124, 123, which is above that 120 level, then that's a good thing. It could actually be something like a good bullish reversal candle as well if we close higher. All right, but right now you can see we kind of like we're still below the 120 at about 119. So want to be careful if we do close below the 120 at 118 or 119 or just, anything below 120. That is not a good thing short term. Then potentially we can see a bit of weakness, right, all the way maybe to like 110 or maybe even the $1. Then that's where you want to be careful as well, right? So this UMS, take note of the 120 critical psychological support level. All right, that level is key. Hopefully we maintain above. If not, just want to be careful whereby we can see more short-term selling pressure. Okay, quick one, UMS on my 1GT system, right? So I mentioned we will consolidating from like 140 to 155. You can see as it consolidated, there were a couple of signals, entry and exit, so not much of a move. But most recently, let me just zoom in for you. You can see right here, we actually had a new bearish, right? It's a red arrow pointing down, so not so good. It's a bearish signal, 1GT bearish signal, as it broke the $1.40 support level. So yeah, we kind of broke the 140, so it's not so good. All right, and we actually had this bearish signal. You can see pump about 1, 2, 3, 4, 5 days after breaking this support level. After this signal, we are still going down, and now we are like about 120. All right, so there are still no exits, right? There's still no exits on this bearish signal. So you also want to be careful, right? Because as I say, if we break the 130, if we break the 120, I mean, if we close below the 120 today, then not so good. This bearish signal can still continue to play out. So there are still no exits unless we start to see a little bit of stability, hopefully above 120 or maybe at 110 or $1, and we see like an exit signal coming out. Then good, it can come like show whereby sellers are kind of like the selling pressure is like going down. All right, not as heavy selling pressure. Maybe buyers are starting to come back, and then hopefully we can see a good reversal or rebound happening if we see a new bullish signal. Okay, so the final Singapore tech stock I would like to share with you, this company called ISDN, right? ISDN, one of the more, I would say, volatile Singapore tech stock that has been like moving up and down over the past year, all right, in this range of about 60 cents, right? 60 cents all the way to around that 75 to 80 cents. Look at it, pretty much the swing high and low, up, down, up, down, up, down, up, down, up, down, right here, right? So this is pretty much the range from about that 60 cents to around that 80 cents, swing high and low, and the support around that 60 cents. Let me just go to remove this right here, and potentially you can see that we are heading towards this same similar support around that 60 cents, right? So a little bit of selling, same thing, we broke that 65 cents. Seems like we are attempting to break this 65 cents level that we've been holding above for the past 2 months, right? So if we go below that 65 cents, not so good. We can head towards this 60 cents level, which is where we were in October, somewhere in May. We're there as well. You can see a couple of rebounds from here. So 60 cents would be a better support, and that is where if you do see a little bit of stability like what we saw here in October, you can think about getting in as well. But as I say, you want to be careful because right now the tech sector is still seeing weakness, so definitely want to see some stability there for a while, before attempting to get in to catch the rebound. Right, so this is ISDN. So far it still looks quite okay. It didn't really like sell down as much as UMS and Frencken, which kind of like broke their support and hit down. All right, in this case we just kind of like came down a little bit after breaking that 70 cents, and now attempting to break this 65 to hit even lower, right? So just take note, ISDN right now, next good support would be around at 60 cents, whereby you can think about getting in, but you want to wait to be a little bit more cautious, right? You want to wait to see some good reversal candles first around there to catch any rebound. So yes guys, there we have it. We have pretty much covered the 4 Singapore tech stocks: AEM, Frencken, UMS and ISDN. So I hope you have a better picture of where we are right now for each of those stocks in terms of like the support levels that we have broken and where can we potentially head to before hopefully some bargain hunting or some buying pressure coming back again. As I say, right now we are still seeing weakness in the tech sector, same thing like in the US market, and the main reason for that would be interest rate hikes expectations, right? There, potentially there could be like more interest rate hikes this year, maybe 3, 4 or 5 times, and that's what people are pricing in, and the market is like selling off because of that. And and that's where I think in March there might be like the first rate hikes coming in, right? So yeah, the news, I mean, people are kind of like reacting to this interest rate hike news, and that's where many of these tech stocks are still selling off. So just want to be careful if you're looking to buy on dips. Make sure you wait to see some stability, some good reversal actions before trying to catch the rebound. If not, if the support were to be broken again, like what we saw for like Frencken and UMS, we can actually hit lower. Alright, so I hope you like this video, right? And if you do like this video, go ahead to give me a like. It will definitely help out the channel, and of course smash the subscribe button as well. Thank you so much for doing this so that you will not miss out on any videos like this, right? Joey here, thank you so much for watching. Leave in the comments below, let me know in the comments below what are your thoughts on the Singapore tech sector, or maybe on any of these 4 stocks, AEM, Frencken, UMS and ISDN. Let me know what are your thoughts on these 4 stocks in the comments below, and I'll definitely reply to each and every one of your comments. Alright, so Joey here, thank you so much for watching. I'll see you in the next video.